Good morning, everybody. It's the 27th of November. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Good morning.
We made it to the end of another week.
Just about.
Just about. Black Friday today.
Can you say that nowadays?
I don't know.
Don't know if you can, mate.
Can't you?
No.
What's it called then? All days.
I don't even know if you can call it Friday. There's a lot of people out there who are born on a Friday and they don't like it being associated with them.
Fridayist.
Yeah.
Yeah, wouldn't be surprised. Quiet day yesterday on the market. It's a bit more of a choppy open today. The US are back in action today, but only for half a day. So volumes are expected to be thin yet again. We did see a little bit of pricing from some of the US indices on the CFD spread betting platforms, but it didn't really do an awful lot. Looking at the European indices, they slipped a little bit to the downside. Looking at the Footsie 100, that is massively underperforming everything else this morning. Haven't seen any particular reasons why. It may be something to do with the weightings of stocks. I'll have a dig into that shortly. But some of the other European indices are holding up quite well, like the DAX, CAC, and EurUsd 50. Steve, you got anything on the charts to show us on any of those?
I will do in a second. I was just sort of like you've caught me browsing through the charts. Let me bring it up.
You need to share your screen as well if you can. Unless we can go straight into FX, because Ian, I'm sure, will be ready.
Not really. I'm all flustered this morning.
Well,
yeah, I don't mind having a chat.
Go on,
then. Dollar index, isn't it, basically? So we had a little bit of a move to the upside in the dollar index yesterday. This is a 4-hour chart, so you can see how sort of weak the rally was. And then we've dipped lower. I'm still looking at this and trying to get confluence areas on the dollar majors, which would highlight dollar buying at these lower levels. So basically between 91.78 and 91.72, I think it's quite a decent buy level. Probably going to get some divergence there as well. I tried to look at it. Easy for me to say on a slightly shorter time frame, but nothing lines up. So I'm just sort of looking back on the majors. I mean, here we've just got a doji day yesterday, which highlights indecision. We've got some resistance here at 1970. And obviously 120.17 is a previous or 120.10 is a previous swing high. And if we go to this time frame, so 1960, sorry, got one first resistance level here actually, which is at 1939, but I think the main focus is going to be here on 1976. And I don't think it's going to be euro strength. I still think it's going to be that dollar index just trying to push down to those levels. So I think we're going to get some really choppy trading today. Cable, when it goes, I think it's really going to go still holding within this wedge formation. I mean, it is very similar to euro dollar chart in the fact that we've just got sort of 3 or 4 days of indecision. In fact, the last 3 days have actually been inside the 23rd of November's range, so they're inside candles. We are seeing a little lift today. I think as long as it closes below that 133.91 fib, then I'd definitely retain a medium-term bearish bias. It's a big wedge formation. I think trend line supports at around about 30. The measured move target's all the way down here, so it's the start of the wedge formation, which comes in at 128.53. If we look at a shorter time frame, the scope for a move to the upside, that forms a butterfly formation, 134.43. So I'd prefer to sell into rallies same as euro dollar, and again just utilizing that dollar index dip, hopefully. Dollar Swiss is a little bit different. I did have this on yesterday and we did get a little bit of a move to the upside, but it's broken the low now, so that's negated that pattern. But if we go to this one, and again it's buying into sort of dollar dips, so 90 04 being a confluence area, and that would actually form a bat pattern. Dollar CAD, notice I'll just skip past dollar yen then because I haven't got a clue. Dollar CAD, I think is just going to consolidate, and it has done for the last sort of 3-4 days. One chart that I did think was quite interesting on a medium term basis, and the 4-hour chart is still pushing to the upside, is New Zealand. Was it New Zealand dollar? Yeah. We've got, this is an 8-hour chart. We've got sort of decent confluence area here, but we are sort of pushing through. But if we look to this time frame, which is the daily chart, we've got a 224 fib here. So I think as long as we hold below that fib level, then again, over the medium term, it could be quite a decent move to the downside. So basically, I think we're still going to see a little bit of dollar selling, but it's going to be really choppy.
Yeah, it feels that way. Steve, what's going on with the stock indices and metals?
Well, I think see this sort of sell-off just recently. I think that's just a sort of a little bit of a just a little bit of a blip. There's sort of like news coming out, just investors talking about being hamstrung between the positive vaccine news and the worries about the economy. So just like normal stuff. I know that Barnier was talking about the fisheries meeting today or something. So, but yeah, the real sort of like thing on the weekly chart for me is we're forming another indecisive week. We've opened and closed like we did last week at the same price. If we close around these levels today, that's the dojis, but they're sort of shooting star dojis. They keep rejecting this move up. Again, we got closer to that 65.15 level that we've been talking about more recently, 64.90, but it's rejected it. So I think Footsie's still under a bit of pressure. This 4-hour chart that I drew a while ago, we were talking about the potential for a head and shoulders. That didn't play out. Let's get rid of that. And the sort of like really the only thing you could maybe talk about is potential for a double top. Although this high is slightly higher than this one, you can still class it as a double top. So that on the 4-hour chart would you'd really want to see a break and a close below 63.12 on the 4-hour candle, which on this chart it comes in at 10 o'clock. So after that, that sort of turns a bit bearish. But it looks like it's running out. Oh, where did I go there? It's running out of steam. As we can see, this little bit of a turnaround on the hourly chart seems to have put paid to the sell-off from 8 o'clock. On the DAX front, it's looking a lot more positive. And we're going to look at the weekly chart again. We had the same sort of candle last week, an indecisive doji. This is a far more positive, but it's still got a level 13,472, which is that previous swing high from back in August, and also further up the yearly highs come in at 13,828. So a little bit more of upside barriers here. It's looking slightly positive though going into the end of the week for the DAX. On the US markets, again, it's a positive week. Obviously, all-time highs in the Dow Jones. Nasdaq seems to have negated last week, the previous week's indecisive bearish candle, and is closing quite strongly. If that can finish off, it will definitely have a, or should I say most probably rather than definitely, most probably have a move to retest the highs around 12,466. S&Ps pushed above the all-time highs this week, and just sitting below there at the moment. On the commodity side, we've got gold. Again, quite an interesting picture in gold. This looks a bit of a complicated chart, so we can ignore all the lines and barriers. But we're in a correction formation, looking to potentially move down to around about the 1750 level. We've held the low of the week is around $1,800, which is a big psychological level because it's big round numbers. People like that. But a break there, and I expect to see an extended move down to at least test the 1763 level, and maybe the play out to the AB equals CD formation, which comes in at 1746. Copper seems to know no bounds, continuing to sort of push to the upside. It's a very parabolic up move. We're seeing bearish divergence, which is where the price is making a higher high, but the momentum is slowing drastically. We've gone above the June highs of 2018 and the December highs of 2017, and nothing looks to be slowing that down. Obviously, copper is a conductive product used in a lot of the well, China is one of the main consumers of it for all the electronic equipment, and that, you know, as we open up from the lockdown we've had, then there's going to be a great demand for it. But it looks like some people are taking advantage of that.
Absolutely.
So yeah, that's pretty much it. Oil has broken it again higher than the August highs, looking very strong around this $45 area. This is on WTI. On Brent, it's a little bit higher, $47.70. And on the weekly chart, we've seen sort of 3 positive weeks going into a 4th positive week. We've broken above the Ichimoku cloud, which was quite decent resistance. And obviously, this goes back to the move we had in March, where we saw oil drop dramatically. That gap has obviously been filled already, but for a good close above that low and close of the 2nd of March is very positive indeed for oil. So that could lead to a bit more of an extended bull run into next week.
Great, thank you very much, guys.
Lovely.
On the news front, there wasn't an awful lot, obviously, given the fact that the US was closed. Bitcoin continued to decline following the recent run that it's had, with questions being raised about the boom in the asset. You know, it's one of those ones that is prone to some vicious sell-offs after strong rises. Some questions over the AstraZeneca COVID-19 vaccine, questions being raised about the efficacy of the treatment after initial results were released. The UK, however, has taken steps to get the vaccine approved before the rest of Europe by skirting the EU regulators. Yeah. So
it's almost as though we planned it.
Yeah, exactly.
Brexit in sort of the end of 2020, just so we can get our vaccine out quicker.
Yeah.
That'll encourage a lot of people to come to this country, won't it?
Yeah.
Sort of like,
Okay, so guns ahead yesterday, 3 trades. We went short on Nasdaq, even though it was closed. There was some pricing that was going on. It did actually close at 5 o'clock UK time, so it stopped trading at that point. We also had 2 trades on euro dollar with Ian and Steve taking on the same trade, but with slightly different parameters. We had 3 wins, which is good. We have 0.79R on Nasdaq, 0.15R for Steve, and 0.07R for Ian. So a little bit of an uptick in the P&L yesterday, but certainly nothing dramatic. Hopefully we can end the week with something decent, although having looked through the charts while you guys were speaking, there was absolutely nothing that I liked the look of. I'm going to have a go at dollar yen though. Ian, that was the chart you avoided.
Yes.
But this is an hourly chart. We've got a short-term downtrend here. Overall, the trend is bearish. We've got some support down here from the swing lows down at the 18th, or from the 18th of November. So just really looking for a continuation of that. Fairly simple. Going to set it now at 104.01. Going to target a move down to 103.66 with a stop at 104.15. So 2.8R I'm looking for on that today. That's my trade of the day.
Good luck.
Who wants to go next?
I'll go. I'm keeping away from the dollar. I'm looking at euro sterling and hoping that we get a move to the downside on sterling strength as we move up to complete that short-term pattern. So 89.22. Here you go. So I'm selling euro sterling at 89.22, targeting 88.59 with a stop at 89.42, giving me 3R.
Lovely. Steve?
I think I'm going to go Footsie. Looking at the move it's had, as we said this morning, and it's sort of recovering from here now. I'm just thinking selling into this little bounce we're having for an extended move to the downside, just in case something nasty comes out about Brexit. So we're getting short at 63.30. I've quite a tight stop on it as well. 63.45. Very tight stop, 15 tick stop. And I'll go for, let's go for an extended move to the downside. Tell you what I'll do. I'll maybe class this as an AB CD correction, maybe.
Ooh.
And target move to 62.65. What does that give me? 4.3 to 1. Okay, I'll have that.
Lovely.
That'll do. Okay, fantastic. So 3 trades there. We have a short Footsie, we have a short US dollar, Japanese yen, and we have short from Ian on euro sterling. Okay, so high impact data today. There isn't any from what I can see on my calendar. We have had some consumer confidence figures out from the Eurozone, or due out. Not that I can see them on my live squawk though. The only thing that's really flashing up and catching my attention on that is the fact that Barnier is travelling to London this evening for UK trade talks and has stated that the same significant divergences persist with the UK on the trade deal. So more of the same. Hopefully there can be some sort of breakthrough over the weekend. But the fact that they are talking and that will be late in the day, expect potentially some gaps on Sunday night when FX reopens, if any breakthroughs are made. So be careful if you're trading anything sterling or euro going into the weekend and holding positions.
Those figures are another hour yet, Joe.
Oh, okay.
It's France that have just come out and Italy. But
Right,
the
perfect.
actual, the European, the combined figure is at 10 o'clock.
Okay, fantastic. Let's keep an eye out for that then, although it is classified as a low impact data point today. Anything else to add, gents?
Yeah, all good for you.
Okay. In which case then, let's wrap it up for the week and see you all on Monday.
Have a good one.
Yeah,
Cheers.
you too. See ya. Bye.
Bye.